After a three-day meeting, the RBI's Monetary Policy Committee deciding to keep interest rates unchanged at 6.5%. The inflation rate has been scaled down from August, we're told, and GDP growth forecast retained for 2018-2019 at 7.4%. The RBI Chief Urjit Patel speaking. Let's listen.
The NSSF and other small savings instruments. However, it is important that the fiscal deficit target is maintained, and not only for the reasons that you mentioned, but also to mitigate the risk of further crowding out, because when the center and states borrowing program is taken together, it is of a large quantum, and therefore I assume that given that these two decisions were taken over only a few days in between, that this was possibly internalized when the government made its commitment to the fiscal deficit target and reduce its market borrowing. So far we have to take that at face value.
Thank you, Governor. Many forecasters were expecting that the Reserve Bank of India would be taking some action to stabilize the rupee, because they are talking about rupee coming under further pressure because of difference with US Fed rates, oil prices going up, and current account deficit widening. The fact that you've chosen to retain the rate, is it indicative of your comfort on the exchange rate front?
Well, so let me say a few words, then I'll request Dr. Acharya to also say something on this. The mandate of the Monetary Policy Committee is a legislated one, and it is a flexible inflation targeting mandate at 4% around, with a band of plus or minus 2. To the extent that domestic and international financial conditions, including commodity prices, affect the inflation outlook and the projections, that is internalized in the projections with the fan charts, and in that respect, the risks that you mentioned are already baked in with respect to the forecasts and therefore the decision that we took today. Please do recall that prior to this we had two rate hikes in the space of literally 2 months.
Well, this was what Urjit Patel said a short while earlier in terms of no rate changes right now.
By end September, the rupee had depreciated in nominal effective terms by 5.6% since end March. In real effective terms, the rupee's depreciation has been at 5%. The RBI's response to these unsettled conditions has been to ensure that the foreign exchange market remains liquid with no undue volatility. There is no target or band around any particular level of the exchange rate, which is determined by market forces of demand and supply.